Anyways, let's check out the official thing here. So we have net revenues were 149.4 million, so they were on the higher end of what Beyond themselves estimated. So that's pretty good. Definitely beat on revenue there, up 31.8% year over year. Gross profit was 47.4 million, which was pretty much around what I said it was going to be. I said it was going to be like 45 million, so it's actually 2 million more than I thought. And that's because the gross margin was up 1.7%. We got 31.7% gross margin, very good. Net loss was 19.7 million. That was actually, yeah, that was the best case scenario loss, actually. So yeah, I get this isn't looking too bad, guys. This is like a pretty, like, just kind of middle of the road. Not really good, not really bad. I mean, revenue growth is good, and everything else is just kind of, again, we were less of a loss, so we have an upward trajectory now for losses, and I think that probably did prevent a bigger sell-off. So yeah, I think not too bad. I think the dip will be bought up. Alrighty, guys, so that was a pretty good conference call. We got a few updates here. So we got a couple of clarifications that I was looking for that was actually very nice. So we have some clarification on the Dunkin' deal and why Dunkin' chose to remove the Beyond sausage from the majority of their stores. And Ethan made two comments on that. He said that Dunkin' wanted to, quote, rationalize their menu, whatever that means. And then he further clarified later in the call when he was asked specifically about it, and said that Dunkin' had a change in management, so that makes sense. So they got some new management, and then the new management took a look at the menu, and some pretty stupid management, in my opinion. Again, unless they plan on just taking it off temporarily to fully veganize it, but they did decide to take it off for whatever reason. And Ethan does say that they still maintain a strong relationship with Dunkin', though, and they plan on still working with them in the future. Ethan said that they are expanding Beyond Chicken as quickly as possible, which is very good because they had such a positive reaction to the launch of it. They also mentioned that household penetration and repeat rates are up, which is great. I mean, we just continue to see that rise every quarter. Very good to see that. And then in terms of JD.com, not sure. I think I might have missed this in the initial news that I put out about it, but I did get some clarification. Again, maybe this wasn't the initial news, but they said that their JD.com Chinese distribution channel, it unlocks distribution to 300 cities across China, which is, again, very nice in terms of their expansion throughout China and just reaching more people. They also mentioned that the construction of the Netherlands facility is completed. Again, very good step right there. They also, I was very happy that Ethan mentioned this because it was one of my biggest concerns and a lot of my subscribers' biggest concerns, that being the cost of products internationally, in the EU and in China. A lot of complaints from not only my subscribers, obviously, but consumers saying that it's too expensive. And Ethan did address that. He did say that they're having a global cost down program to access local supply chains in the EU and China to drive down the prices. So that is, again, very good. Ethan also said they're looking to have more competitive prices. So again, he really wants to get prices down, and he even admitted that the Chinese products are way too expensive and wants to get them down. So again, he realizes it's a problem and he's trying to address it. So very nice there. We should hopefully see some prices come down within the next year or something. He didn't really give a specific date range there, but he did say that more info would be in the next call, but the plans are in fact in motion to get the prices down internationally. So again, very good there. And in terms of operating expenses, they were they were 66 million, and I had predicted 64 million, so I was pretty close there. I was just off by 2 million. And lastly, we have labor shortages postponing launches in QSR. So he didn't really specify exactly what that could have been. Maybe it could be McDonald's. I think I did hear that they were being kind of short-staffed. They're really trying to, I think they're offering like $17 an hour now for new hires. So I think maybe McDonald's is getting understaffed. I don't know. But yeah, these labor shortages apparently are postponing some fast food launches. But yeah, that's pretty much it, guys. In terms of the call, pretty good stuff.